I think that accountants have been put on pedestals as like this god that can solve everything in business. Oh, I need help with your business, speak to your accountant. Need help with this, speak to your accountant. And it's actually the vast majority of accountants are just general practitioners that are trained to do year-end accounts and tax returns. And that's keeping HMRC happy. And when you look at the accountancy qualifications and how they're structured, they're all geared towards big business. They're not really geared towards helping small business owners. And so if you've got the very people that are studying finance not really geared up to help small businesses, how on earth are small business owners supposed to know anything about finance? Because even accountants don't really understand it.
If you're a UK director and your eyes glaze over when someone mentions KPIs or cash flow, you might just be sabotaging your own profits and risking your business's future. Now, the truth is, most directors dread financial jargon. They miss red flags and they often pay the price in lost profits, unnecessary stress, or even insolvency. Now, if you keep ignoring your numbers or you track the wrong ones, you're not just risking profits, you're gambling with your peace of mind, your family's financial security, and your ability to scale or exit successfully. Today, I am speaking with Claire Hancott, business finance expert and author of the book Profit by Numbers, 39 Lessons to Master Your Business Finances. In the next hour, Claire's going to reveal exactly which 3 numbers every director must track, show you how tiny adjustments to your pricing could immediately boost your bottom line, and share practical strategies to prevent cash flow nightmares. So if you're serious about safeguarding your business's future and your family's financial security, I want you to listen closely. You're about to get absolute clarity on your business finances. Let's dive in. Claire, welcome to the Director First podcast. Would you be able to tell us a little bit about yourself, sort of who were you, what happened, and what you're doing today?
Yeah, absolutely. So I feel like I am where I belong. I was born to do this. When I was a little kid and people would say to me, what are you going to be when you're older? And I always used to say a businesswoman. I had no idea, no concept of what that meant, but I felt like this has been in my blood and this is always what I was meant to do. I studied accountancy and actually ran some of my own businesses. My partner and I, when I was much younger, we had some fish and chip shops. I tried to buy a cafe when I was 17. So I've sort of been in the trenches of really hands-on business. Both my parents have got their own businesses as well. So yeah, I studied accountancy, started a bookkeeping business when I was much, much younger, but quickly realised that I wanted to be chartered, and to do that you need to go into the corporate world. So I joined that, let's call it a hamster wheel. I mean, I loved it. There were bits that I really love and I still miss to this day, but my heart has always been more in small business. So about 2.5 years ago, I left my job as a finance director in the corporate world and started Profit Cash Growth. Wow.
Tell us a bit about the chippies.
Oh, do you know what? I put on so much weight. But yeah, it was really, I must have been 17. And my boyfriend at the time worked in fish and chip shops, and then, you know, why not? Let's get our own fish and chip shop. And it just kind of went from there. And we had a couple, and it was really like an eye-opener, worrying about insurance, worrying about stock and all of these practical things in a business that at 17 I literally did not even know existed. So yeah, it was a really, really tough learning curve. I'm not with him anymore, so not involved in those businesses, but yeah, I think that was really the start of like lighting a little fire underneath me to say this is what I'm going to do.
My mate, he had chippies for years, and he used to have them in town in Preston where he stayed last night, and he absolutely loved it. And he actually got out because of how violent he was at the end of the night. It just went that crazy, Preston Town Centre. But even when I ask him now, he says that was the best business I was ever in, and there was loads of cash. It was dead profitable. But I bet it were quite long hours.
It was really long hours, especially when we had more than one. But what I found really interesting is we lived in Norwich, and we had at the time we had one shop in what was known as the Golden Triangle. It's a very affluent area, and then we had one in at the bottom of like a high-rise council block of flats. And now I look at that with a completely different perspective, because I look and I think, why did we ever take that one in the rundown area? Because people coming in, they've got £1 to spend on a portion of chips, versus the rich people that are coming in around the corner and spending a tenner a head a time. So yeah, there were pros and cons for each. The wealthier people were much more fickle about, you know, you make a mistake and they're never coming back to you, but that was a lot easier to run from a financial perspective, that's for sure.
So I've read your book over the weekend and I really, really enjoyed it. But I want to ask you the question, what inspired you to write the book Profit by Numbers?
Yeah, so working with business owners, there's not many accountants that are really able to make things quite simple. And I get asked a lot of the same questions, and so that's kind of what that is some of the most common questions that I get asked. But really, we've got a library at home. You know, we don't really watch mainstream TV and read, you know, fiction books and things like that. So from all of these, I've probably read like 1,000+ business books over the years. Mm-hmm. And when you read something that sticks with you or really resonates with you, I think it just makes such a difference. Mm-hmm. And so I think that little bit of inspiration to think maybe I could be the spark that makes a difference to somebody in their business.
I like it. I've read loads of business books over the years.
What's your favourite? My
favourite? Good question. I was going to follow. I just wish I'd applied some of the stuff I've read, you know. Favourite ever business book? I mean, do you know what really changed it for me? And I think it's a bit nonsense now, right? But do you know what really changed my life is I read The Secret. And I was probably about 22. And previous to that, my life was very different, very chaotic. And I read that. And it was about positive thinking. It was like the law of attraction. And that really changed me. It really led me into that world of like personal development, positive thinking. I mean, sat here today, 25 years later, 22, 32, 20 years later, manifestation for me, it's a little bit, you've got to put a lot of work in.
Yeah.
You have got to put a lot, but back then it was groundbreaking for me. So I've got to mention that. I really enjoy things like, you know, 7 Habits of Highly Effective People. And I tell you, one of the ones that I've read fairly over the last few years, it's one of the best books that's really helped me. And we touched on it before we went on air, and it's They Ask, You Answer. And it gave me the idea to really, in my industry, insolvency, why we've been so successful is we tell people, everybody, what a novel idea. You know, we literally educate them on absolutely every question that they might have before we ask for any money. And obviously, very, very recently, I love the whole Mosey stuff. You know, really helpful. And I like all the Tony Robbins, that type of thing. So what about you?
I think probably, I love Atomic Habits. That's a really good book. But Surrounded by Idiots.
Okay, I can identify with that. I'm sure my team say the same thing.
It was a book that I read when I was probably in my early 20s, and I think it's probably something that everybody goes through at a stage of their life where you feel uber confident, and you know, I was a newly qualified accountant, I was rising up the ranks, but things weren't quite going how I wanted them to go, and it was because I hadn't yet mastered that connection with people and being able to influence people and give people what they want. And it's about how you've got different personalities in different people, and you've got to speak the language that they want. So is it somebody that really values connection and relationships, so build the relationship? Is it somebody that values logic and data? Find that. It's about finding what that person really wants and values and delivering that for them, even if you're still talking about the same thing like accountancy or insolvency. There's lots of different ways to do it, and I think that was game changing for me, because that really enabled me to overcome that barrier of talking to people in a way that they would understand and that they wanted to talk to me, and not just my style all the time.
No, I get it. I did a lot of NLP in my early years, and that's essentially being able to communicate.
Yeah.
I mean, sales is a really dirty word, isn't it? People don't like to... listen, you've got to be able to sell.
Yeah.
Like, whether that is selling to my missus last night to go to an Indian or a Chinese, or selling to, like clients on the phone. Like, there's always a caveat for me. It's like, I really believe in what we do here. So much so, I see directors make the wrong choice when it comes to insolvency. And it can cost them the house. It can cost them the piece. Like, if you make a mistake, I'm not saying we're the only good firm. We're not. We're the best. a little bit biased, but Trustpilot says we're the best, so okay, who am I to judge? But because we're really confident in what we do here, we've got a duty to get that client over the line, and that is to sort of get them to make that decision, get them to make that that really important decision as to, because obviously I've spoken to lots of finance people, accountants, and if I ever say the word sales, they go, almost. I've said some, Chris, I don't sell, I don't market, I just base myself on referral only. I'm thinking, well, that's not very scalable, is it? So you must, the fact that you're here today, what's your view on sales?
That's my full-time job.
Yeah. I'm so glad you said that.
I think I actually posted something on LinkedIn the other day which got quite a bit of backlash, and it said that if you want to know whether an accountant will truly help you grow your business, look at how they run their business. Are they reviewing your pricing? Are they doing sales? Are they following up on leads? Are they chasing you when you don't come back and accept their quote? Like, how are they operating in their sales process? Tells you everything you need to know about how growth focused that accountant truly is. Do they understand what it takes to run a business, or are they an accountant?
I love that. And you know what? That's made me really think. My accountant, I've known him for years and years. He's an accountant, and as long as they're a competent accountant, I know exactly what he does and what he doesn't do, right? I don't go to him for other things because he's an accountant who does the year-end account. I'm going to get into this because that's why you're here. But I think I remember, I've got another chap who I know. Have you ever come across John Holiday?
Yes. Yeah.
And I've seen his sales process, and I love it. He'll send a quote out to people, and if they've not followed up in a number of days, it's bang, there's another one. And I've interviewed John before, and he says, I train my accountants to sell. Yeah. And I absolutely love that. It's because most accountants, they're not great business owners.
No.
We're not going to slag them off all hour, aren't we? Because there's a place for accountants.
And I am an accounnt too, so I've got a real soft spot for it, and I get it. I've worked in traditional accountancy firms, and they're like a whole breed of business that I think business owners, if they saw what happened in an accountancy firm, I think they'd be very, very shocked by it. That's for sure.
Why do you think small business owners, not even small business owners, because obviously I see horror stories daily, and you would be astounded at some multi-million-pound businesses when you look at their non-existent finance function. Yeah. Why do you think business owners in the UK struggle with finances?
I think that accountants have been put on pedestals as like this god that can solve everything in business. Oh, I need help with your business, speak to your accountant. Need help with this, speak to your accountant. And it's actually the vast majority of accountants are just general practitioners that are trained to do year-end accounts and tax returns. And that's keeping HMRC happy. And when you look at the accountancy qualifications and how they're structured, they're all geared towards big business. They're not really geared towards helping small business owners. And so if you've got the very people that are studying finance not really geared up to help small businesses, how on earth are small business owners supposed to know anything about finance? Because even accountants don't really understand it.
I think one of the biggest disparities is what your accountant actually does, what they can do you for an extra fee, what they don't want to do at all. Because I'll give you a typical example. We get hundreds of inquiries from directors every month who are insolvent, they can't pay the debts when they fall due. And once we've took that initial inquiry, sort of what's the problem, where do you want to get to, can we get from A to B, we say, listen, we need some information from you. So do you have like a balance sheet, do you have a profit and loss? No, my accountant never does that.
Yeah.
Well, do you pay him for that? Or her for that, what have you got? Well, I've got my accounts. I said, well, you're not put them in since 2023. And like, that is absolutely useless. Like literally that you've got to do that to stay out of prison. But above and beyond that, it's about as much use to the chocolate tea cosy. So why don't, and I think one of the problems is because accountants are so crap at selling, Like they'll get a client for year end, they could be selling the monthly management accounts, they could be selling them quarterly reviews, for an extra price. Because I mean, in the defence, if you're paying £2,000 for your account, 200, 300 quid a month for your accounts, that is just it, isn't it? It's your year end accounts, absolutely nothing else. So what are the things that they're missing? What tricks are they missing, small businesses? What should they be asking their accountants? What should they be, what information should they be? In fact, no, I've got a better question. You talk about the 3 numbers in the book that you should be tracking, the three bits of information. Can we dive into those?
Yeah, so, particularly my background in corporate, I had a whole team of people that would just sit there and do forecasts and budgets and try and predict what's going to happen in the future. And small businesses and a lot of accountants as well, if somebody's, struggling or not making enough profit or struggling with cash flow, they'll say, we'll do a budget. And it's like, no, because all the budget's going to tell you is that you're still going to be in a crap position in 6 months' time. It's not helpful. And if you do have that little moment of magic where something changes in the business and something becomes better, your forecast is now out of date and you've got to redo it. So you spend forever digging into spreadsheets and planning when it's just draining your energy and your focus away from doing and actually changing the future, not trying to predict what's going to happen. So I think that business owners should just plan 3 numbers. I always think sales is incredibly important because, I don't get up every day and think, oh, I wonder how much gross profit I'm going to make today. I get up and I think, right, I'm going to hit this and I'm going to do X amount of sales. That's what is driving me. It's vanity, we all know it, but sales is what keeps the doors open. So you should always have a sales target. And then off of the back of that, I think you need to have a target as to how much profit percentage you want to make in the year. And the reason why I say don't focus on a value is because if you say I'm going to do 1 million sales this year and you do 800, how do you know what profit you're going to make? You need to have a percentage in mind so that you can. And then how much of that profit you're going to convert into cash. So cash percentage too. And every year you just want to be trying to notch up that percentage a little bit. Put 1, 2, 3% on.
Listen, let's go through that then. Okay, sales.
Yeah.
And I love what you're saying about budgets there. It's like, and I've been that guy as well that is driving myself mental with budgets, and I'm trying to predict the future. And really, I know the way for our business to grow comes down to a number of things. We need to continue to offer outstanding service, so people will talk about us and they'll review us. We've got to get leads through the door, a combination of organic, paid for leads. And we've got to convert the bloody leads as well.
Yeah.
So talk to me about sales, in your business, what does sales look like to you?
So how do we do it in my business?
Yes.
Yeah, so we use LinkedIn. It's pretty much our sole source of leads. It's where we're focusing. So I post content every single day. There's stuff going out. I engage with people. I put about an hour and a half to 2 hours a day just engaging with people on LinkedIn because I know if they see me, like you say, I add value. I'll give people advice. If somebody says you've got 5 minutes to hop on a call, yeah, no problem, because I just know that in 10 years' time that is going to come back tenfold. So at the moment I am the sole person doing sales, so it's my full-time job. I don't really do accounting, and generating leads on LinkedIn, talking to people. We've got the podcast, we've got the book, we've got a YouTube channel. So people come to us, we sort of try to push them towards some of that content so that they can see what we're about, they can see my style, do they like me, do they want to work with me, and then from there, one of the things that's been really important for us is pricing is incredibly difficult, particularly when you're working with sort of larger businesses like we do. We tend to work with like 7 and 8 figure businesses. So if we misjudge the pricing, that could have a massive impact because we're going to be working with that client. We'll have a team member allocated to that client several days of the month. So if we get that wrong by 10%, that's a lot of a drain on our time. So we now just do an audit. We'll do a free audit for a business owner, and we'll have a look at their accounts. So we'll log on. Typically, it's log on to Xero or QuickBooks, Sage, whatever it is they've got. We'll have a look at their processes, how good their data is, because everything starts with data. 9 times out of 10, a business owner says, "Oh, my bookkeeper's doing everything, but they give me management accounts and they just don't make any sense." Like I look at the numbers and I know that stuff's missing and things like that, and it's like, well, it's because your data's wrong. You haven't got processes in place. You're not running a finance department. You're just entering data and then hoping everything works. So we focus a lot on that front end, telling people what's not working, what they need to do, and then if they want us to fix it, we can fix it. If they don't want us to fix it, they can take that report away and implement it themselves.
Okay, excellent. And what you like at asking for the money?
I have no problem doing that. I mean, what do people think that they're contacting me for? A freebie? Like,
Yeah. Will you give them some free? I mean,
100%. Yeah.
We'll give them a ton of free stuff.
Yeah.
And we've got a dead sneaky business model. We're just going to knock your socks. I've said it before. We'll knock your socks off with free. We'll give you so much free value because we know you're going to need someone like us. Because if they're ringing us, we're checking: are they qualified? Have they got a problem big enough that we can help solve? And most firms will be like, well, we want £5,000 on account on day one.
Yeah.
Without giving anything, and we'll go, no, we'll take that risk, because at the end of it, I think it's very hard for people to say no, because we've built up all this rapport, we've answered all the questions, so when we're asking for that money, then it's like that trust thermometer is through the roof. We've given real value, we've given real time, we've told them under no obligation, and then we've asked for the money.
Yeah.
But so many people are scared to ask for the deal.
Yeah.
And professionals are terrible at it generally.
Yeah. You get all bashful because you're not, you're an accountant or you're a baker or you're a solicitor, you're whatever your profession is, you're not a salesperson. I think that's where you've really got to be, if you're going to start a business, you've got to be really, really realistic about what that means, and you become a salesperson and a business person, not the profession that you've done previously. But I mean, when I was in the corporate world and I was the finance director, I was responsible for the pricing department. So we did hundreds of millions a year in sales. And one of the things that we used to say was that it's quite a valuable thing to have some sort of loss leader up front. And I think that's kind of what we're talking about here, isn't it? It's giving something for free or cheap up front that, when you look on paper, those numbers don't stack up. But you do it because you know that once you've proven yourself, that high ticket sale becomes much, much easier. And I think that's the difference between a commercially focused accountant and a numbers focused accountant. If you're just focusing on the numbers, that loss leader up front doesn't make sense, and they're going to be telling you to cut it. And I'm like, no, hang on a minute. I do this free audit for people because I know I get X amount of customers out the other end. But a numbers focused accountant without that commercial edge will say, but you just lose loads of money on it. You need to cut it from your product list. And that's the difference. We've got to live in the real world of business, not just on spreadsheets.
So when we talk about profit percentage, could we dive into that a little bit?
Yeah. So a lot of business owners are focused on the number at the bottom of their profit and loss, how much money they can take out of the business at the end of the year, or how much money they're going to pay tax on. And particularly when the businesses that we're dealing with, 7 and 8 figure businesses, some of them are making $1 million plus profit. And those numbers look phenomenal. And, don't get me wrong, I'd like to make £1 million profit a year. But actually the percentage has gone down. So that means they might now be turning over 10 million, and previously they were doing 5 million and making 800k profit. Now they're doing 10 million, they're making 1 million profit. So where's all the rest of it gone? Because we expected our profit to double and it didn't.
Yeah.
So you've got to track that percentage to make sure that you're not just getting bamboozled and carried away with the fact that you've got bigger numbers. You actually need to know what percentage of every pound you do in sales, what percentage drops through and becomes profit. That's what we're trying to track, and make sure that that is consistently going up, because the only way that goes up is if you're consistently delivering efficiency and optimization in your business and getting more out of your team and more out of your systems and assets.
Why do you see that number drop? Because I see it all the time. People get big growth, they think that they've hit the jackpot, and actually that's the thing that's pushed them over the edge, and they look back and go, I just wish we hadn't have grown at that rate.
Yeah.
What's going wrong for these people?
Well, sometimes it's planned. Sometimes you do have to take one step backwards to go 2 steps forward. And, if you've got to take on new people, or you've got to invest in marketing or something like that, that makes sense as long as it's planned and you've done a bit of number crunching. We call it micro forecasts. When we're doing any sort of one-off things, we will do a micro forecast, but we won't ever forecast the entire business. So sometimes it's planned, it's deliberate actions. But often it's when you start to get to sort of 7 figures and above, then you're talking about having a management team in place. And that is a management team that isn't really responsible for doing anything but managing people. And they're expensive.
What's your dream team? Come on, let's talk about what would a management team look like to you, and what would it cost? Yeah,
well, I think that with a management team, you only put A players on it. And this is what I see a lot of business owners do, particularly small family-run businesses. You know, we've all had...
My brother's in there, by the way, be careful.
Yeah, no, but this is the thing.
He's very good, though. He's very good, yeah.
We've heard the phrase, because we're both in property, we've heard the phrase sort of accidental landlord, but I call it like an accidental business owner. Like you kind of started out on your own and now you're running this massive business and you don't really know what you're doing.
Yeah.
And, you know, we all sort of feel like every day we're winging it, but it's how are you putting the team, the strongest team around you to make sure that they are filling the gaps for your weaknesses rather than putting people in that you're comfortable managing because you feel like maybe you don't have the skills to manage somebody more senior, or sometimes business owners think, why would that big shot want to come and work in this business? And so they go for a lower skilled person. But managing people and delivering through people is a skill. And it's often very, very overlooked. And just because somebody is a great bookkeeper doesn't mean that they should manage a team. Or just because somebody's a good salesperson doesn't mean they should manage a team. So it's about really understanding what do you need out of a manager, and a manager needs to engage people, motivate people, track performance. I was recently listening to a podcast actually, and quite a few people have started talking about a T structure when they're recruiting. So they talk about like the top line of the T being like general business commercial awareness. So you need to understand HR, you need to understand IT, sales, operations, but then the deep line on the T is your specialism. So for me, that's finance. You know, if you're getting a marketing person, they're going to have a deep knowledge in marketing. But to be a manager or to progress in a business, you absolutely need to have that top level overview and understand how a business works.
When you're sort of budgeting these type of things, you've sort of mentioned try and get an A player, and an A player is going to cost money, isn't it?
Yep.
That scares people, doesn't it? So what would you be your advice to a business owner there that's sort of getting to a level now where they've done really well with but those that have got them to that point aren't going to get them to the next point? What would you be asking them to think about?
Well, I would actually say go and talk to other people first off. Go and talk to other people that have been there and put that management team in place and see what they liked and what they didn't. I think firstly, people like to recruit somebody that's very good at administration. And, you know, because I think I'm a business owner and I've got a million things that if somebody could just do for me every day, it would be really, really helpful. So that's normally what you recruit. And then you just put the title of manager on the end of it because they may be paid a bit more than other people in the office or something like that. And that's where it kind of goes wrong. So I think you need to really go to job sites, go and have a look at what other companies are advertising for, look at the skills that they're asking for and look at the qualifications that they're asking for. Now, qualifications take with a pinch of salt, but absolutely it's the skills that you are going to be recruiting for and what you're paying for. And I live in the southeast, so if you're looking for what I would call an A player in a managerial position, I'd say that salary starts at 50k, not at 25, 30k. If we think minimum wage is £24,000 now, so asking a manager to earn 50k doesn't seem that unreasonable, but obviously it's going to vary around the country, isn't it?
So that percentage, I mean, you talk about exiting the business in your book as well, so some businesses will go on to sell. And one of the things that, that's what a buyer's going to look for, isn't it? They're going to want to see an increase in those profits year on year, and obviously with a view that they could, by buying the business, they could increase them further. So what type of, I mean, obviously a business making more money every year is a good idea, but even the minutest of increases could really help. What goal should a business owner be trying to aim for year on year as growth?
In terms of growth, well, I think the growth this is why we focus on the percentage, because what we want to do is make sure that our profit percentage doesn't go backwards, and that we're just getting these incremental increases every year. So often, you know, when we all start out in business, when you're a sort of six-figure business or trying to even get to your first 100k, getting these massive jumps forward is not difficult. You can double your profit in a year just by simply putting some sales on the top line. But when you get a bit bigger, that becomes more difficult. So I would be saying to a business owner that, you know, even a percentage increase of 2 to 3% every year, if you're an established business that's not getting double-digit growth year on year, then that is quite realistic.
And I think you mentioned in the book that if you're not growing, you're shrinking, aren't you? Because people don't realise, inflation, things are costing more. So you've got to be making some type of growth, otherwise you're going backwards.
Yeah, I mean, I'm talking to business owners and they're telling me about the growth that they've done over the last few years, and I'm thinking, that's inflation. Like, you actually haven't grown at all. So all you've done is your turnover's just kept up with your cost increases, and you've stayed exactly the same. Meanwhile, your competitors are still growing, therefore your market share has actually become smaller. So therefore in the marketplace, you're shrinking. And there was so much opportunity that you could have gone after if you just simply said, where is my sales growth coming from? Is it coming from new customers? Is it coming from price increases because we're charging more? Or is it coming from inflation? And understanding your source of growth and what's happening in your sales number is really important. You can't just look at the top line number and say, oh, we've grown 5%. Well, yeah, everybody has.
Let's come on to cash.
Yes.
Let's talk
the
about
killer.
it. Yeah. What goes wrong with people?
Do you know the most common thing I see, and I maybe shouldn't say this because I would regret saying this, but the amount of my customers that pay me early.
Yeah.
Because they get an invoice in and a well-meaning person sitting in the office thinks, oh, I'll get that off my desk, I'll pay it. Because they're sitting every day on the banking app just being very reactive when payments come in. And I think that is the biggest thing, is just not having a cash mentality in your business. Like, actually, if you had just sat down with the person that's doing your administration, it's normally a PA or an office manager, if you just simply sat down and said, we need to hold on to cash as long as possible and explain why, that wouldn't be happening. But nobody's talking about finances in the business every day. It's not, you're not getting your team geared up to understand that we're here to make money and we need cash in the bank. That's the two things we're here to do. And so there are some really simple fixes, like paying everybody on one day every month, so you're in control of everything, and every single day looking at who owes you money. And being reactive to, that person hasn't paid, or this invoice is due in a few weeks, let's call this person now, see if they've got any queries with it. It's these simple things that don't take that long, which make a massive difference.
People are scared to ask for money.
Yeah.
There's a big chapter in this book about credit control.
Yeah.
So could you just give us like your main points on credit control? What should people be doing?
Yeah, so firstly, if you're on top of your bookkeeping, then systems like Xero, Sage, QuickBooks, they really do the legwork for you. They send out automated emails to people and statements and things like that. So not being on top of your bookkeeping, I think, and relying on your year-end accountant and things like that is firstly where a lot of people go wrong. So if you haven't got that basic in place, you need to be doing that, because if you don't know what's overdue, you can't chase it. But secondly, the most important thing that a business owner can do is switch their mentality for worrying about overdues to worrying about nearly dues. So if you focus on things that are nearly due, so if you're a business where you offer 30 days end of month, then you're probably going to be looking at things that are due in the next couple of weeks. If you're somebody that offers 30 days, then I'd say focus on what's due in the next week. But you just simply want to be in touch with your customers before the invoice is due, saying, are there any problems? Can I confirm you've got the invoice? Are there any problems? No, could you just let me know what date it's going to be paid? Because I know from my experience working as a finance director, the suppliers that chased us are the suppliers that we always made sure were on the payment runs. The ones that didn't, if we were a bit tight on cash or needed to delay anything, they'd be the ones that would drop off or say, oh, we'll put those next week, don't worry about them. And if you can prevent issues, so often it's like missing proof of delivery, missing invoices, all the simple administrative things, that if you can deal with those before the invoice becomes due, then the supplier can pay, or your customer can pay you on time. Whereas a lot of businesses are just waiting and then worrying about something once it's become overdue and you've already got a problem.
Talking about people who aren't great at collecting money, and then they become a real pain in the arse.
Yeah.
Can we have a natter about HMRC?
Oh my God.
So, I have seen, last week I had 3 winding up petitions that crossed my desk. One was for 30 grand, one was for 38 grand, and one was for 45 grand. I couldn't believe it, because generally they never take action on such low amounts. And the typical HMRC story, it's just so easy not to pay them.
Yeah.
In fact, before we dive into that, can we just talk about what was in the book? Because I found that really interesting, is how you can help improve your cash flow when it comes to HMRC.
Yeah.
Do you want to share that with the viewers?
Well, just simply, you can put yourself on direct debits, make sure you're on direct debit for everything, because you get an extra 3 to 5 days to pay all your tax bills. So that's a really simple one. Little things like making sure that if you're eligible, you're on annual schemes, so that you're not paying monthly, you just pay at the end of every year. And then with HMRC, they have something called a time to pay arrangement. So there's different limits for most of the taxes, but simply if you've got any problems paying HMRC, then you can literally just fill out an online form and get extra time to pay them. And the interest rates are really competitive. I think it's 2.5% above base rate, so that's more competitive than pretty much every business.
What we're not saying you can get cheap money by not paying your VAT bill, are you?
No, but if you're going to get a business loan,
I get it. I completely get it.
Get it from HMRC. Because
so many people are frightened of the revenue.
Yeah.
Like that and I've been there before. Like I remember in a previous life, business had gone down the toilet, and we had these VAT bills that kept coming every 3 months. You're thinking, I've only just paid one, because I was that blind to what we're talking about today. But people will ring us and they are frightened to death of HMRC, and they don't want to tell them bad news. And the key thing is they've got to communicate, haven't they? They've got to get up to date with your returns, pick that phone up. Time to pay arrangements. Another tip I want to give people who are watching: try and push it as long as you can. Like, because there's a little bit of a battle that goes on with the person at the end of the phone who's just doing their job. They're going to ask you to pay it in 6 months. Now, if you're organised and you have a good compliance history, you could get 3 years. It's not regular.
I know some that are paying over 7 years as well.
Wow.
And these are not even, this is less than £10,000 that they owe, but because it's a relatively small business, they've had 7 years to pay it. So, yeah, pick up the phone. But I mean, you can do it online now as well. Like VAT, I think if it's less than 30,000 and you haven't had other time to pay arrangements, you can just fill out an online form and it's granted like that.
Really? I actually didn't know that.
Yeah. So, HMRC, at the end of the day, I know HMRC are not known for their commercial savviness, but the more businesses that stay in business, the more taxes they collect.
Yeah.
So it's actually within their interest to support businesses, and they are aware of that.
And that's what directors don't understand. It's like they never want to play hardball, but the reality, and don't get me wrong, the revenue of the gloves are off at the moment. Like they are really, they're hammering people that are behind. Like I've never seen petitions go out for such a. For those that don't know what a winding up petition is eventually, if you don't pay a creditor, they've had enough of you, they'll petition at court to get you out and put you out of business. And the Revenue are the #1 petitioner in the UK. But if they fall, then winding up petitions will result in zero. Yeah. Very little will go back to the revenue. In fact, most cases it'll be absolutely nothing. So people don't realise they've got a bit more power than they actually think.
Yeah, but even you hit the nail on the head. You have to speak to HMRC, because if you don't pay HMRC and you don't tell them, they fine you and they charge you interest. Whereas if you speak to them and say I'm having difficulties, then they just charge you interest and the penalties don't keep coming.
And the interest is quite commercial.
Yeah, the interest is really commercial compared to external loans and things like that. So yeah, HMRC, they're not a fantastic organisation, but actually they can be really helpful if you find yourself with a short-term cash flow hole in your business.
You talked about winging it.
Yeah.
And I just want to dive into that, because I think most people, they'll see people, LinkedIn, YouTube, and they'll go, oh, they've got all their shit together. But the reality is different, isn't it? Like some days I think, flipping out, you get that self-doubt. How's that been for you?
I really actually struggled a lot with it. Probably 5 years ago I was a very different person. I really struggled, particularly when I was in corporate and surrounded by, when you're on sort of in a board level position and you're surrounded by people and you kind of dreamt your whole life this is where you'd be, and it's not where it's not what you thought it was going to be. But I've got a lot better at it now. I think particularly speaking to other accountants, like I get a lot of other accountants and bookkeepers follow me and say, I love what you're doing, would you mind helping me? And the biggest piece of advice I say to them is, I feel like an imposter every day. And I just have a choice to make. I can continue to feel like an imposter and stay still, or I can just keep moving forward and pushing through the fear. And I think that's the only thing that separates successful people and non-successful people, is you feel the fear and you do it anyway.
I like that book as well.
Yeah, it's a brilliant book.
I think sometimes our self-perception, I don't see myself as other people might see me, you know, like, and this might come from programming as a kid, or levels limiting self-beliefs, but like, I've seen so many people, they don't understand how good they are at something, and they've got, like, it's because they're played with that. So imposter syndrome's okay, we can live with it, can't we? I know I suffer with it. It sounds like you can still suffer it from time to time, and we just got to get ourselves up, dust ourselves down, and keep doing a good job, and maybe one day it'll go.
Yeah, I like to steer away from calling it imposter syndrome, because I do think that sometimes, you know, if I decided to join a Premier League football team, I'd say to everybody, oh, I've got imposter syndrome. And I'd be like, do you have imposter syndrome? Or you're actually not a football player, you don't have a Scooby-Doo what you're doing. This is not imposter syndrome. This is your natural instincts kicking in, telling you you're out of your depth here. And I think that's where people struggle, is if people are feeling, I don't know what I'm doing, it's, do you not know what you're doing, but you've got the skills to overcome it and figure a way through and it's going to be okay, versus you really don't know what you're doing and actually you're about to get yourself in a lot of trouble here and you should stop. And there is this tendency to, everybody overcompensates and said it's imposter syndrome, don't worry about it. And actually I think people end up in a lot of crap, particularly some really small businesses that plough thousands into starting a small business with bad ideas and bad cash flow and end up in financial trouble.
I love actually that point of view, because like some people aren't cut out for business, are they? And that's the reality. It's like this is not for everybody. But you know, those bad ideas that get off the ground and they plough the life savings in and the mum's life savings in, they could all be spots. The damage could be limited if they had a finance function in their business. So let's sort of move on. So you emphasise time and time again in this book about cash flow being the lifeblood of any business. Why do you think it is so often overlooked?
I think people are focusing on profit too much. So firstly, when you start, you focus on sales, and that's right. I think when you're, you know, a micro business, it's just you, just worry about getting money in, especially when you first start, because I think if you spoke to a lot of business owners and said, when you very, very first started your business, what was your idea versus the reality of what you're doing today? And so too many people worry about honing the perfect product and the perfect marketing thing and branding. You know, we've all sat there and deliberated over what colours we should use and what pictures we should use, and it's all pointless.
It's all bollocks, isn't it?
You just need to figure out what somebody's going to buy from you and what price they're prepared to pay for it. And that's kind of what your first 100k should be doing, is figuring that out. And I think that business owners in their first 100k should be focusing on sales, then they should focus on moving to profit, and then they should be focusing to moving on to growth. But to do all of those, you need cash. You cannot do any of it without cash.
What's a really basic system that they can be using to keep an eye on cash flow?
Yeah, and you know, I'll say you need a cash flow forecast, and that sounds really simple, but a lot of small business owners will be looking at the bank, and all that tells you is it's okay or not right now. It doesn't tell you is it going to be okay in a week's time. And I think that's the difficulty, is you need to understand your numbers, because if you understand, for example, the average amount of time that X customers pay you, then you can start to think, okay, where am I going to be in 6-8 weeks time? Am I going to have a problem? And that's where you get a bit bigger and you can start to use data a bit more to get more predictable results. You know, when you're a bit bigger and you've got different revenue streams in particular. So, you know, I was speaking to a builder, for example, and construction is notoriously difficult for cash flow. And they're saying to me, you know, cash flow is a real issue. We want to grow the business, but we can't get any more finance. And I'm like, well, you need to go and do residential jobs. You're focusing solely on commercial. They're paying you 60 days end of month. You need to grow your residential side of the business to really boost your cash flows, because residential pay upfront or on completion of jobs. So you use that. It's not brilliant from a profit perspective because the margins tend to be lower and the jobs are smaller, but that cash flow allows you to grow the more profitable side of your business. So when you start to get a bit bigger, you start to have more options to play with, and that's where you've got to really understand the numbers and be able to say, okay, you know, residential is one business unit, commercial is another. Let's have a look at the numbers for each of those and decide which lever we now want to pull for growth.
No, I love that answer. What is your go-to method for diagnosing a potential cash flow problem?
Yeah, that's a really difficult one. I would say that the types of businesses that we tend to work with actually have a lot of cash, and people think I'm lying when I say this, but they're very successful businesses. They tend to have got to like a couple of million, and they've got a lot of cash in the bank, and they're talking about buying commercial property, and they're talking about taking on new staff, and they're talking about opening new locations. And that, for me, they're red flags, because they're lots of new things that are going to happen at the same time. And that's a concern when I see a business trying to implement multiple things in one go that it's not done before. That's a sign that they're probably going to have some hiccups, because nothing ever goes to plan in business. We know that. Everything always takes longer, and it costs more money than you think. So if you're somebody that's thinking about doing multiple things at once, please don't.
I think it's Alex Hormozy talks about niche slapping people. You know, and that was one thing that I did as growing up, is like very entrepreneurial. I'd have loads of different plates spinning. And it's like in our businesses, there's certain things that we could do in addition to what we're doing. But we've had to be really disciplined and go, you know what, we need to, this is where we earn, this is where we can be different, and go, no, we just do this bit. So it's tempting though, isn't it?
Yeah.
You know, it's like people, you mentioned there, you know, marketing, new people, buying new property. And when they've, and I'm guilty of this, I've had times in business where we are like, we're living on credit cards. Like I've had those times. I've had those times where I'm dreading Friday, thinking, how the fuck am I going to pay everybody? And I've had times where you've got like years worth of running costs in the bank.
Yeah.
And when you're at the latter, I've always said to myself, I don't really need a cash flow, you know. And I've slipped on it, and I've dropped it completely. So what would you say to me there when things, a business owner, when things are good, there's ample cash coming in, why is the cash flow it's still important?
Yeah, look, that gets measured gets done, right?
Yeah.
So the more cash you have in your business, the more options you've got. And I think you never know what's going to come across your desk. You never know what commercial property there's going to be to buy, what business that might be to buy or to invest in, or a competitor that's going under and some assets you might want to buy. You just never know. So I don't think you can ever have too much cash, that's for sure. And really, finances being a part of your business culture can't be something that you switch on and off. You either are a business that involves everybody in its finances, and everybody understands the part that they play and how that leads into you having a profitable, growth-focused, cash-focused business, or it doesn't. You can't switch it off and on because it's good or bad. That isn't practical. So you have to do it all the time. But what does change is maybe the level of detail and the focus that you go to on it. That's appropriate. So, you know, when times are really good, it might be that you're only talking about it at a monthly meeting instead of a weekly meeting, because you're not in a sort of firefighting mode. But it's still something that everybody in the business needs to be aware of.
I've been looking forward to getting onto this point, and it's really talking about the differentiating between management accounts and year-end accounts. And why people really need to understand what the difference of these two things are. So could you please explain to us, what are management accounts, what are year-end accounts, why are they so different?
Yeah, so year-end accounts, let's start with that. Year-end accounts are what you file with HMRC and Companies House once a year, and they tell them the financial performance of your business and ultimately the taxes that you've got to pay, and that's what you look at if you go onto Companies House, and you can look at everybody's accounts. Now, there's actually a legal format for those. I won't bore people, but you can use something called microentity, FRS 102. Like, there's a legal statutory format that everybody uses. Now, my business is accountancy, and I've got, I don't know, like your business is service-based business, so the format might be quite similar. We might have similar costs in our business, but what if we're a property business? All of a sudden, why are we using the same format of accounts? We don't have the same costs, we don't have the same income structures. So actually, because we've got a legal format, just the format alone is restrictive. But also your annual accounts are only done once a year, whereas your management accounts should be done, most people will be doing management accounts monthly. Some bigger businesses or more complicated businesses will be running management accounts once a week. And they should be completely customised for your business, and they should be painting a picture as to how your business is performing. And you use your management accounts to make smart decisions. Your management accounts tell you what is working, what isn't working, and then you take action to either, in the language of Alex Hormozy, he says 10x on the stuff that is working, double down on it and repeat it, roll it out across the rest of the business, and the stuff that isn't working you fix.
And so monthly management accounts, I mean, that's what we say to directors. When they sort of come through these processes, we invite some really brave ones onto a podcast, and they sort of talk about what their experience is. And one of the questions is, what's the lesson that you've learned?
Yeah.
And without fail, it's I need to keep a track of my numbers. Now, for someone out there that is a builder, butcher, candlestick maker, it doesn't really matter. And although Xero is sold as a really simple solution that anyone can use it, my view is you really need that's something you should be outsourcing straight away.
Yeah.
When they're looking for that person to run Xero, what should they be looking for when they're trying to find that bookkeeper, so to speak? Can you help them? Can you sort of give them a guide on what they should be looking for?
Yeah, I mean, actually, with technology these days, the data entry side of doing your bookkeeping is kind of taken away. We've got systems that you can put an email into it, put a PDF document into it.
What's that thing you called? I listened to it on Instagram the other day.
OCR, yeah. So,
tell us about that.
Yeah, so basically people imagine a bookkeeper is going to be sitting there sort of plugging away, keying data in the system, logging all the invoices and things like that, but that is all automated now. So if you haven't got technology that's automating that, you're behind the curve and you're paying somebody to do data entry and you don't need to. So that's firstly what I would say is utilise technology for data entry. It's absolutely available. And then that means that what you actually have got is you've got somebody not doing data entry, but somebody that is looking at queries, looking at things that don't quite add up, looking at anomalies. And so to do that, you need a higher level skilled person. And what a lot of business owners think is that, they haven't run finance departments, they don't know how it really works. But in a big business, you have your data entry people that are logging all your invoices, raising all your sales invoices, doing your bank reconciliations. Then you have a whole team of management accountants that take all that data and say, what's right with it, what's wrong with it, what invoices are we missing, what suppliers haven't billed us, what bills have come in this month but actually relate to next year, and all of that type of thing. They're making all these adjustments, and only once those adjustments are done will they then produce a set of management accounts. But what we get is, because of how far technology's come with like Xero, for example, it's very easy to sell yourself as like a data entry bookkeeper and say, I can run the management accounts for you. And all they're actually doing is clicking a button on Xero and pulling out a report. They're not looking at it and saying, do these numbers make sense? Or they're not looking at it and saying, how can the business owner use these numbers? Simple things like the amount of times somebody will send me an example P&L and the codes are in alphabetical order. And I'm like, that's just the out-the-box standard that Xero does. The alphabet means nothing to any single business, so why are we presenting numbers in that format?
How should they present the numbers?
That will be bespoke for every business, but generally what we recommend is, so you start at the top, so you have your sales at the top, and then you would move to what we would call your direct costs, and these are costs that would directly vary with your sales. So if you did no sales, you would have none of these costs. So they would be things like if you pay commissions or referrals, that type of thing. If you're a product-based business, it's the cost of making your product and delivering it to your customers. But then we've also got what I refer to as like operational overheads. For a business like a logistics business, for example, they might have drivers, which if they don't do jobs, they're still going to pay salaries, but they're not really an overhead because they're contributing towards the delivery of work for clients, if that makes sense. And then we have what I'd call pure overheads. And your pure overheads are like your rent, your rates, your insurance, all of those things that just come in every month and kind of stay the same.
In addition to obviously the three key numbers, you mentioned in the book about tracking other KPIs in your business. what would be the most important KPIs that a business owner should be tracking?
It depends on what type of business it is.
Service business.
So service business, I'd say the most valuable you could track would be revenue per employee. As something in my team, every single team member knows the value of the book of clients that they look after, and that's the KPI for them. It's how we decide, could that person cope with more clients? Do we need to find more clients to keep them at maximum capacity? That's really important for a service-based industry. But for a asset-based industry, so if you're maybe like a manufacturer or a HGV business, or you need to buy equipment up front in order to service your customers, then I would say asset utilisation is key. How many hours a day or how many days a month are your assets working and earning you money? That's going to be really, really important.
So when it comes to one actionable strategy that any business owner can implement today as a result of watching or listening to this podcast to make them more tax efficient, what would it be?
To make them more tax efficient is thinking about the timing of your investments. This is something that I see a lot of business owners where they don't have a proactive accountant that they're sort of working side by side with. They just go and decide to buy new things because they're growing their business. So they might go and decide to buy new vehicles or decide to invest in machinery or something like that. And the timing of when you do that can have quite a big impact from a finance perspective. So there's two really key things. Firstly, I've seen a business owner, their year, let's just say it's calendar year, so their year end runs to the end of December, and in November they went and took out a massive loan for some new equipment that they wanted to buy. So their year end accounts showed that this was quite a highly debted business. So then come the next year when they were planning on still growing the business and they wanted more finance, they couldn't get it. If they had just held off and bought those assets in January, then that debt wouldn't have been on their balance sheet at year end and they would have been able to get more finance the following year. So it's little tips and tricks like that. But then also the timing of when you buy those assets. If you can get them into a specific tax year, you can pretty much wipe out your tax bill for that year.
And you talk about in the book actually, which I found really interesting, is in some cases it's probably not worth buying the assets.
Yeah.
Could you hammer home that point to people who are watching?
Yeah, so a lot of business owners will be quite cautious of taking on debt, and they'll think we'll save up, or we've got some money in the bank, let's go and buy some assets. But actually, using cash to buy assets is probably the worst thing a business can do. Really, as a minimum, you want to be putting them on finance because a pound in the hand today is not worth a pound next year. We know that from inflation. So putting them on finance is a minimum, but often like renting them or leasing them is more commercially viable from a profit perspective and from a tax perspective as well.
What is the one mistake that you see people make time and time again when it comes to business finances?
Probably having the wrongly skilled person that they believe in good faith, and I do think that this is a little bit like accountants and bookkeepers also need to take some responsibility for this, but accountants and bookkeepers mean well when they say I can look after your finances, but what they actually mean is I can look after your data entry. And a business owner believes that they have delegated responsibility of their finances to somebody else, and that cannot be done as a business owner. You cannot devolve responsibility to somebody else for your finances. It has to be your responsibility because every decision that you make in the business ultimately comes through in the numbers. So how can you outsource that?
So let's talk about a finance function. And it's going to differ from whether you're turning over 200 grand a year to 20 million pound a year. What's the basic finance function that any business owner should have? So let's start with like those small businesses, because I know you break it down really well in the book, but let's talk about a business that's turning over 250k. What does their finance function look like in an ideal world? So
in an ideal world, you're going to have a bookkeeper and they're going to keep on top of your day-to-day admin. And you might think, I don't need day-to-day admin, or, I only need monthly bookkeeping, or quarterly. It's probably like a real bugbear of mine because people think, I just get my bookkeeper to do it once a quarter when the VAT return's due. But actually your bookkeeper, as I've covered, they should be doing data entry, they should be spotting mistakes, they should be telling you, that your customers haven't paid you, or they should be telling you that, you've accidentally paid a supplier twice, or this direct debit keeps going out, are you sure you need it? That's the type of thing that a bookkeeper should be doing, keeping sort of control of transactional information in your system. Then you want a management accountant, finance director, call it what you want. That's going to be somebody that's going to crunch your numbers and make your numbers useful. They're going to present you with information that allows you to understand how your business is working and helps you to make decisions about how you can move your business forward. So if you are a financially savvy business owner, you could probably just do with somebody who can crunch the numbers and present them in a good way. If you're not financially savvy and you want some help, I'd say a finance director, because the finance director would give you that strategic advice on top of the accounts. Then everybody needs a tax specialist. And this is something that is often overlooked, is the specialities in finance. So management accounting is a speciality, tax is a speciality. People think, oh, I've got an accountant, they can do everything. You haven't. You've got a GP.
Yeah.
And when you go to your GP and you need heart surgery, you go to a heart surgeon.
Yeah, I like that.
Or when you need your eyes testing.
I'm going to definitely use that line in my own as if it was mine. Yeah, love it.
Yeah. I mean, I get asked sometimes about insolvency and things like that, and I'm like, do you know what? I probably have a little bit more of an idea than the average person on the street, but it's not even something that we study in accountancy. So you've got your bookkeeper, your management accountant, FD, strategic advice. You've got your tax specialist, and a tax specialist is somebody that really you only need to call on probably every 3 to 5 years. I would say it's good practice for somebody every 3 to 5 years to visit a tax specialist and just get an overhaul, because they're not just looking at business taxes, they're looking at inheritance tax, personal taxes, everything going on in your life. Or if you're doing something like buying and selling a business, or you're making a big investment, that's when a tax specialist comes into their own. And then you've got your general practitioner accountant, and really they're doing your year-end accounts.
They can't mess that up. Surely they can't.
Oh no, they can.
But a basic, well, I've always thought to myself, like your year-end accounts, I mean, how can you fuck them up?
Well, there is a clause in pretty much every single accountant's terms and conditions that says that we'll prepare the accounts off the information you send us, we'll send them back to you, and once you've approved them, you take full responsibility for them.
Yeah, no, I tell that. But it's like, if you're giving them the right info, dare I say it, your choice of accountant is not as important as your choice of your finance, the rest of the players of your finance function. Like, they've got to be decent, whereas if you've got a decent team there that's giving that accountant the right information at the year end, surely it's very hard for them to make a mistake there.
Where the issues come in is because business owners don't know what a year-end accountant needs to know, and a year-end accountant, the tax law is like hundreds of thousands of pages long. So a year-end accountant isn't going to ask every single question of, have you had this? Because honestly, as a business owner, it would take you a whole year to even respond to the questionnaire. So from that perspective, there are sometimes things missed, but generally, no. Most small businesses don't have complicated year-end accounts. What I would say is if you're a group company, that's when you need to be paying a bit more attention to the accountant that you're getting. Because if we think in the UK, most businesses don't get above 250k turnover. So 90% of businesses stay under 250k turnover. It's not therefore too much of a stretch to say, well, probably 90% of accountants also don't have experience with businesses over 250k. It's actually a different legal format of accounts and things like that. So also, when you then start to layer on other complexities like multi-entity, tax rules are different from multi-entity, accounting rules are different from multi-entity. So if you've got more than one limited company, you need to make sure you've got an accountant that's got experience with multi-entity.
But the main thing is focus on that finance function in your business, and that is bookkeeper, some type of fractional FD or full-time FD, depending on the size of it, and a tax advisor. On the fractional FD side of things, I've seen this more and more of these last few years. People are really scared about how much that's going to cost.
Yeah.
And obviously it's how long's a piece of string. If you are an FD for a 7-figure business, it's going to be a lot more than one for a £500,000 business. But for people to get in their heads, could you perhaps give us a percentage of what someone should be paying out of their revenue per year for a finance function? Is that an easier thing to ask?
general, I'd say 1% if you just want the tick a box and do your tax returns and things like that, and then an additional 2% if you want the advisory side of things. So how to grow your business, how to improve your cash flow, all of that type of stuff. 2% of turnover, but it does vary a lot industry to industry. If you're a business that's got, if you're a service-based business, you're going to typically have the most simplest accounts. You're going to have far less transactions, far less complexity in your transactions, so it's going to be a bit cheaper. If you're a construction business, manufacturing, you've got assets, logistics, there's far more.
But it's not as big
parts.
as people think. I think that's the point I'm making. It's like, get the advice, and we're going to come on to where we can find you a little bit later on. But
I mean, to give you an idea, we run people's entire finance departments. We do everything from start to finish, including their year end, and we charge £2,500 a month for that. And these are multi-million-pound businesses with moving parts. They get full management accounts. They get access to our team whenever they want to ask questions. We do their bookkeeping. We do their payment runs. We do their payroll. There's nothing we don't do. You can completely devolve that to us.
That will surprise people.
Yeah. So it does depend on your business, but it's not as expensive as people think.
What is the one habit or mindset shift that makes the biggest difference to financial outcomes in businesses?
Not to keep cutting costs. This is a real bugbear of mine. A lot of accountants, it's the go-to thing in textbooks. From years ago, it probably worked 50 years ago before we had digital systems and things moved quicker, that if your business wasn't profitable, we needed to cut costs. And that's what works.
The first thing they take is marketing and sales.
Yeah, and that's what works in really big businesses, because it's much easier to move the dial on cost than it is to move the dial on sales. But in small businesses, I am yet to meet many small business owners that have out of control costs. Sure, they might have a few rogue direct debits, but they are generally over everything that's going in and out of their bank account. They're not wasting money. Mm-hmm. So saying that we need to cut costs and do a budget and control costs is very short-sighted, because all that encourages people to do is penny pinch, and they cut down on things that actually help them be more efficient. So they cut software that automates things and helps them be more efficient. They cut that marketing software that was automating emails to people and things like that, and it has a detrimental long-term impact.
And become a lot busier.
Yeah, so your headcount, you need to put more people in because you're less efficient, but also it just means that you're focusing on the wrong thing. In a small business, I would say 9 times out of 10 it's easier to go and get a new customer than it is to try and save some costs on the bottom line. The other thing with cutting costs is it's a one-time event. Okay, so I cut £5,000 out of my business this month. How do I do that next time? So actually, for small businesses, if they're not making the money that they think they should be making from a profit perspective, then actually 9 times out of 10 we need to look at your sales and your margin, because it's not, your pricing isn't right or your sales process isn't working.
For people who are watching or listening to this, if they were to take only one piece of advice away from the podcast, what would it be?
Oh, that's such a good question. I would say there's not one size fits all. So if somebody is saying this one thing will change your business, and you're a business that's got to 7 figures, that is not true. Because yes, tiny businesses just need to focus on one thing, sales. But when you get to a 7-figure business or beyond, you've got multiple moving parts. There is not one thing that you can do that will significantly change your business or give you a successful business overnight. Mm-hmm. And the most important thing you can do is just focus on, let's make sure that all areas of my business are running well, and who do I need to put in place to make sure that the operational side runs well, the sales department runs well, the finance department runs well.
Where can people find out more about you?
Yeah, so I'm on LinkedIn. I live on LinkedIn every day, so follow me, Claire Hancott, on LinkedIn, or just go to my website, profitcashgrowth.com.
Claire, you've been a tremendous guest. I've really, really enjoyed our conversation with you. Thank you for coming on.
Thank you so much for having me.
Cheers.